as the first Deputy Administrator for Resilience. And in that role, my job was to make sure that FEMA was entirely focused on not only responding to and recovering from disasters, but preparing for and ideally preventing those disasters from ever occurring. I mentioned that each of us, through our own unique angle, our own unique lens, has lived through a disaster, has seen a disaster, has had, again, friends and family. But the disasters that I've seen are the ones that define me. So I'll talk about a couple of those. And more generally, I say these are the disasters that define us. The first disaster that I experienced was 9/11. I was in the top of the Capitol building on that bright sunny morning on 9/11. And I saw the flames and the smoke rising from the Pentagon that day, from the top of the Capitol building. If any of you know, the Capitol building is the tallest building in Washington, and from there you can see anything, including the Pentagon. That's the actual picture from that day, from the Capitol, as I saw it that day. I realized that not only had a terrorist attack struck close to home, in this case the Pentagon, but later we would learn through the 9/11 Commission report that the Capitol was actually the intended target of Flight 93. To this day, I owe my life to the brave souls aboard Flight 93. And there's actually a plaque that commemorates the passengers from Flight 93 on the Capitol building. It saved the Capitol, and it saved my life. Later, I would start just a few weeks before Hurricane Katrina at the White House. I was in my 20s. I had a background again as a firefighter. Just got my master's degree and found myself in the White House during the most catastrophic natural disaster of our time. That obviously left an indelible impression on me and again taught me a lesson that why didn't we do something for New Orleans and the other areas hit by Katrina before the disaster struck, rather than deal with it after, rather than deal with the $200 billion in losses and thousands of lives lost. Why didn't we do something before it happened? Well, later, when I had the opportunity to join FEMA in 2017, as you may remember, it was a busy time. It was Harvey, Irma, and Maria were in 2017. And I joined FEMA just 3 days before Hurricane Maria. Again, some of the same challenges from Hurricane Katrina, like vulnerable infrastructure and vulnerable populations, we experienced again with Hurricane Maria. And again, I asked myself, why didn't we do something to reduce these potential losses, the impacts of these disasters, before a disaster struck? Finally, on my last week at FEMA as the Deputy Administrator, I was asked to go to the White House Situation Room suddenly in January for a meeting, which was strange because you never really suddenly go to the White House Situation Room for a meeting unless it's an emergency, and this was a policy, it wasn't a national emergency, or so I thought. As I walked in, I realized what I was walking into, which was, it was the first meeting of senior administration officials in the Situation Room with something called novel coronavirus. And I sat there seeing the conversation happen between cabinet members. I was backbenching, right? I'm not a cabinet member. Secretaries of various departments were sitting at the table. And this isn't a picture from that day, it's a picture from what was thought to be, which generally is believed to be, the first meeting of what was called the COVID task force led by the Vice President. That picture is from March. I attended a very similar meeting in January. I left government later that week. And honestly, what I saw that day in the Situation Room bothered me. It bothered me for months. And so finally in March, I felt the need to talk about it. I wrote an op-ed for Politico, you can search for it. And I said, coronavirus is a disaster. Why hasn't FEMA been put in charge? Just 3 days later, FEMA was put in charge. We can argue about whether that was the right decision or a wrong decision, just like we could with Katrina or Maria or 9/11. But the bottom line is, each of those disasters taught me, in each their unique way, that we need to be proactive, that we need to take an approach that involves resilience rather than just responding to and recovering from. So why resilience? Well, there's at least two big reasons. One is it saves lives. We know that a resilient structure will protect the residents, the inhabitants of that structure when a disaster strikes. We also know it saves money, right? Fewer disaster losses, fewer financial losses after a disaster because that structure is more resilient. We can put numbers behind it. Costs the nation $100 billion annually and grows at 6% a year, which is 10 times faster than the population. Again, we can talk endless statistics, but the takeaway here, resilience saves money and it saves lives. When I say resilience, I put it into kind of three buckets or three pillars. The first is preparedness. Think of that as preparing to respond. Could be training for first responders or them exercising those plans, developing plans and exercising those plans. Could be equipment. And in that column, in the preparedness column, the federal government's done quite well. FEMA alone spends billions of dollars a year helping states and local governments become more prepared for disasters, whether they be man-made or natural. The Homeland Security Grant Program that FEMA has, that primarily benefits state and local governments to prepare for acts of terrorism. Right, that Homeland Security Grant Program has been in place since DHS's creation, 2003, and has provided every year billions and billions of dollars. Pre-2005, it was really aimed at terrorism, and it still is by law. There are still grants aimed at preparing communities for acts of terrorism, but there is definitely a dual-use nature to that. If a community is better trained to respond to an event, whether it be terrorism or not, the community is better prepared for all hazards, in my view. So preparedness is a key part, and that is, again, preparing to respond. Mitigation, something very familiar to this group. Anything you do to reduce that risk. So hazard mitigation reduces a risk today so that in the future there will be fewer losses. And again, we can quantify that, and NIBS has done yeoman's work. In fact, NIBS is, I would say, the definitive source on defining the financial benefits of hazard mitigation. And then three is insurance. And as you heard, my background is in property and casualty insurance, having been at the largest P&C commercial insurance broker for the past 6 years, just recently left. And before that, at FEMA, one of the programs I oversaw was the National Flood Insurance Program. And NFIP is the largest single peril insurer in the world. Insurance is risk transfer. So like hazard mitigation is risk reduction, insurance would be risk transfer. And I believe that those are kind of two sides of the same coin. Because we need to both reduce the physical risk as well as financial risk. You might be wondering what the future of FEMA is. We will talk about that. But before we talk about that, let me just say that my view has not changed in the past year and a half since the conversation kind of began about, well, do we really need FEMA? Can FEMA just go away? What should happen to FEMA? Well, I had the opportunity to testify before the House of Representatives in March of last year. What I said then is still strongly believed today, which is not only should FEMA continue to exist, but FEMA should be transformed in a way. It should be transformed primarily as the nation's risk advisor. Like FEMA should just be there responding after the disaster. And as much as I appreciate my former FEMA colleagues with their blue jackets, blazing with FEMA, being there on the scene right after disaster strikes, I think that FEMA needs to be there long before disaster strikes. In fact, all emergency managers need to do that, consistent with my vision for resilience. So my view then, and my view now, is FEMA should be transformed into that trusted risk advisor. And that FEMA's mission is actually all the more relevant and important today, given the number of disasters we've seen and will continue to see in the future. But that focus, again, should be resilience. It should be what we can do now to make the nation more resilient for the future. And I guess before we talk about what the future of FEMA is, we should just make sure we're all on the same page about what FEMA's role is. FEMA was founded in the late 1970s by executive order by President Jimmy Carter. But the legislative actions that have occurred since its founding through executive order, including the major law that undergirds FEMA's mission, which is the Stafford Act from 1988, those really define what FEMA can and can't do today. The Stafford Act specifically says, here are the actions that are necessary for FEMA to be able to respond to a disaster. And generally speaking, it involves the governor making a request to the president evaluating that request with the input of FEMA, and then the president deciding whether or not to declare a disaster. If the president declares a disaster, that means FEMA can move full bore ahead. That means FEMA can physically respond as necessary, and even more importantly, we'll talk about this in a bit, financially respond. Because most disasters in America, even those that are presidentially declared, do not involve a physical response from FEMA. It doesn't involve response teams. It involves months and years and often decades of financial reimbursement. One of the largest programs that FEMA has for financial reimbursement is public assistance, PA. This is the vast majority of FEMA's funding goes towards funding state and local governments' response and recovery from disasters. Essentially, think of it as like a government-to-government balance transfer, right? It's the federal government transferring funding out of the disaster relief fund to state and local governments that were impacted by that disaster. And that could be for public infrastructure, it could be for government buildings, it could be for eligible nonprofits like hospitals or educational facilities. That's the big program. A smaller program, but one that often gets a lot of attention, is individual assistance. IA is where FEMA writes a check to an individual. It provides, FEMA provides that funding to that individual for their loss during that disaster. But what often gets confused is that we often think of IA as insurance, as personal insurance, homeowners insurance. It is not. IA pales, an IA payment from FEMA pales in comparison to the amount an individual would receive from their insurer. In homeowners insurance or renters insurance. In fact, IA, on average, it's always hard to do averages, but on average, it's like $4,000, $5,000, right? $4,000 or $5,000. Again, pale in comparison to what you'd receive from your insurer. Your insurer is the only one that can make you whole. Your insurer is the only one that can help you rebuild after a disaster. Your insurer is the only one that's going to make sure that you are taken care of for the long term, and you will recover more quickly and more fully as a result. IA is a social safety net program for the uninsured. Hazard mitigation, as we talked about, is an important part of resilience, and FEMA provides funding to do hazard mitigation projects. FEMA provides both pre-disaster and post-disaster hazard mitigation assistance. In the case of post-disaster mitigation assistance, think of it as strengthening that infrastructure after the disaster, rebuilding after that disaster in a way that will reduce future losses. It just makes sense, baking in resilience when you're rebuilding after a disaster. Likewise, it makes sense to strengthen your infrastructure long before disaster strikes, right? That's ideal. Both of those programs are hazard mitigation programs. Both are authorized by the Stafford Act. And finally, there's something important to note about federal funding, which is there's a cost share involved. Generally speaking, the federal government pays 75% of a declared disaster. Okay? 75% of the losses as a result of that declared disaster. Meaning the state and local governments are on the hook for 25%. So this is particularly relevant to the PA program, right? And to a few other programs, but particularly PA. Meaning that if a local government or a state government has experienced that loss, they will be, and they receive a presidential disaster declaration. They will receive that funding from the federal government, and they will be on the hook for about 25%. Remember that number. But here's how I feel about those programs. That big program, the program that's about 80% of all of FEMA's funding, it reimburses those local governments, those state governments after disaster at the same rate. That's 75%, regardless of what actions that communities took before the disaster struck. In other words, you might have a community that paid millions of dollars to strengthen their community, to build a flood wall, to reduce the flood risk. And as a result, there are fewer losses to the federal government. That community gets reimbursed at the same 75-25 rate. And this is even more striking when we know what the return on investment for hazard mitigation is. We know that everybody knows the NIBS number, the 6-to-1 number. Everybody knows $1 invested saves $6 when the disaster occurs. And that's not just people in this room. I assure you that everybody knows that 6-to-1 number. And it's thanks to NIBS. And we can debate about how much of a return, for this type of mitigation measure, it's all quantified, but like this mitigation measure against this in this area for this peril. But even knowing that there is that strong return on investment, we're still doing the same old way, which I would argue the system isn't broken. It's working exactly as designed, just backwards. Now that we've covered what I would call the FEMA 101, let's talk about FEMA for the future. I personally am optimistic, now cautiously so, but in general, I am cautiously optimistic today in a way that I wasn't a month ago or a year ago. You might be surprised to hear that. Well, let's remember where we were. A year and a half ago, FEMA was going to be eliminated. Even 6 months ago, several FEMA programs were going to be eliminated. Even a month ago, there had been no leader or even a nominee for FEMA. Even a month ago, there was a leader at DHS, of the parent organization of FEMA, that continued to say FEMA should go away. So yeah, the bar was set low. But here's why I'm cautiously optimistic. Number one, that leadership change at DHS. Secretary Mullen, as early as his own confirmation hearing, spoke highly of FEMA, said it was an important mission with a dedicated workforce, that there needed to be a permanent leader and that he would make sure that a leader was nominated. He said that the micromanagement that the previous leader of DHS had been putting FEMA through would end. And I gotta tell you, he's delivered on all those promises. Those commitments he made at his hearing, he's got a month later, he's committed to that. Because point two, he's had the president nominate a leader, a guy named Cameron Hamilton. And the fact that we now have a FEMA nominee, meaning we may soon have a Senate confirmed leader for FEMA for the first time in this administration, is very encouraging. More generally, I would say, again, those favorable comments that the Secretary made at his hearing about FEMA show that perhaps there's an opportunity for a strategic reset here, which is good, right? Given FEMA was potentially just going to go away, and now it's staying, and not only staying, but let's make it good if it's staying. And finally, I see it as a cultural shift. And my friend Natalie Enclade, who worked with me at FEMA and is here today, she always talked about the culture of resilience and the need for not just FEMA, but all Americans to embrace this culture. That we need to take care of each other, ourselves, our families, our communities, our household. We all are in this together, so we really should make sure that we all believe in resilience and not just ask that our federal government do that for us. The second reason I'm cautiously optimistic is a landmark bill that's been introduced and is making its way through the House of Representatives, called the FEMA Act. And the FEMA Act brings a lot of common sense reforms, many of the reforms that a lot of us in the emergency management community have been talking about for years, and it codifies those in an act. And that bill, if passed, would bring dramatic reforms to FEMA, and reforms that, again, I would say are long overdue, and two, would be warmly embraced by the emergency management community and by FEMA itself. Now, what are the prospects for this bill? Maybe I'm not as optimistic on that, but I'm optimistic that all of those reforms are put in one place, in one bill, and every day there's an increasing number of co-sponsors. Friend Aaron Davis said just today that there were a number of co-sponsors added to the bill. That is reason for optimism. Does it mean it's going to pass this Congress? I'm not as optimistic, just the larger political environment. Although I would say with one asterisk, someone says, is there any chance of this bill passing? I said, well, that chance actually goes up dramatically if we have a bad disaster, right? Because anytime there is a catastrophic disaster, and unfortunately, dollars, lives are lost, questions come from policymakers, this massive destruction, how did this happen, how did this failure happen? They ultimately look for reforms. And if there were a major disaster this year where there was that kind of call to action, this is a bill that would be ready to go and could be quickly passed if there was a desire by Congress to do so. Now, many provisions in this bill, the one provision I want to highlight, my favorite provision here, it's an incentive program that's baked into the public assistance program. Again, the big program that reimburses where the federal government reimburses state and local governments. Right now, remember the number 75-25? The bill would change in a very positive way. It would say rather than everyone just get 75-25, you would get reimbursed between 65 and 85%, depending on what that community or that state did before the disaster. So if that community invested in resilience, if that community insured their assets, if that community was fully prepared, then likely they had fewer losses, and it makes a heck of a lot of sense for the federal government to reimburse that community at a higher rate. That's a very worthwhile incentive for everyone. It saves the federal taxpayer dollars, it reduces the resources needed from FEMA, and it hopefully convinces the surrounding communities that may not have been so proactive that they need to be better prepared next time if they want to be reimbursed at a higher rate. Point 3, you may have heard of the FEMA Review Council. That council delivered their report just about a few weeks ago. Now that report, nothing earth-shattering. It's actually quite consistent with that FEMA Act that we talked about that had been introduced previously. But here's an outside group of experts, politicians and professional emergency managers, who, as an independent body, made strong recommendations to the administration for FEMA reforms. But the most important takeaway here is they did not recommend FEMA go away. And that was a real possibility just even a year ago, where FEMA might go away. And everybody's wondering, what's this commission going to say? They are making recommendations to the president. And thankfully, one, they did not suggest FEMA should go away. They talked quite a bit about the role, the important role, the critical role that FEMA plays and should continue to play. And they received thousands of comments, feedback from elected officials at all levels, as well as citizens and organizations. And here's some of the interesting recommendations they made. It's interesting to me. One, that public assistance program, again, keep beating the drum again, this is the biggest FEMA program. Right now, as we mentioned, it's a reimbursement program. It takes you many years, sometimes decades, for communities to be reimbursed by the federal government for their losses. This would turn that program on its head. Instead of a reimbursement program, it would be upfront block grants. So soon after a disaster, that community would be provided with the estimated losses as opposed to the actual receipt, losses. And I think that makes a lot of sense. This is probably the most popular recommendation amongst the emergency management community because it would, in theory, speed up the flow of funds to that community after disaster. Because many of these communities experience cash flow issues after a disaster. If it takes years to be reimbursed, those hard-hit communities are going to have a hard time, basically running that government and rebuilding at the same time. How do you prioritize, especially when resources are so stretched? So block grants are a potential solution. Again, devil's in the details, but potential solution. 2, hazard mitigation funding after the disaster, like we talked about, that strengthen that to a more resilient level after disaster strike. That they would receive a faster payment. A portion of that hazard mitigation money would come right away. So instead of having to wait until years later to receive the 15% that you could spend on making that infrastructure more resilient, you could potentially receive some right away. And second and third, NFIP, so National Flood Insurance Program, they said needs to be reformed, and the private market needs to play a larger role. I agree. Again, devil's in the details, and we'll talk a little bit more about that in a moment, about what those potential reforms could look like for NFIP. Now, something I think that we've all learned, all of us in the built environment have learned over time, which is we can have all the data in the world. We can have the NIBS mitigation saves report, and we can demonstrate the real ROI, the benefit cost reduction the benefit cost ratio for each of these types of hazard mitigation measures. But unless we have real world examples of where that hazard mitigation investment has actually saved a community or reduced losses to a household, or taken a community that was vulnerable to disasters and made it resilient, then the numbers really don't matter, right? Because it's hard to convince policymakers of all these numbers and data and analysis. No offense to engineers, I know we have many of them in this room, but that may not resonate with policymakers who just want to understand, what the heck's the benefit of this? And so the more that we can highlight those success stories, the more that we can show where there's a real world benefit, especially if it's in your community or a congressional district, right? And law is not in, yes, a congressional district. But yeah, if that member of Congress can see, look, isn't it great that this community in your district took that action? That's going to be far more salient for policymakers than more analysis or more numbers. And so think of those real world examples that you may be aware of and how we can highlight those to other stakeholders and policymakers. The BRIC program, it's a program that we put in place in the first Trump administration. I was sorry to see that it was rolled back a year ago. Luckily, it's back. So BRIC is back. That's the bottom line. So the Building Resilient Infrastructure in Communities program that provides billions of dollars a year to communities before a disaster strikes. Again, this is a pre-disaster hazard mitigation program. Is back. And before we take victory laps, we should say, listen, this is a program that's not perfect, but it provides the overarching goal that it intended to, which is billions of dollars a year in hazard mitigation. I think all of us need to acknowledge that it can be refined and updated and improved based on the lessons that we've seen over the last couple of years of implementation. This is the opportunity that we have before us now, which is let's improve the program, let's have that feedback. Hopefully FEMA embraces this, and hopefully Congress and then the administration through the FEMA Review Council also embrace some of these ideas on how to improve the program. Because what we need is for this program to exist long term. It's not going to do us a lot of good if this is a program that gets turned on and off on a whim. We need it to persist. And for it to persist, we need to, one, demonstrate those real world benefits like I just mentioned, those real world benefits that we've seen in our communities, and two, that we need to show that it is a sustainable program, economically sustainable program that deserves to remain intact. But BRIC, or any of these programs we talked about, alone are not going to solve the crisis that faces us. The crisis that faces us is one where we're seeing an increasing number of disasters and we are seeing increasingly vulnerable populations and communities and infrastructure. All of you know more about the built environment than I do. All of you know about the infrastructure scorecards. You can probably recite off the top of your head which communities are graded how, higher or lower. BRIC or public assistance or any of those FEMA programs alone cannot solve that problem. It's going to take the communities and the emergency managers in those communities. It's going to take the insurance industry, and it's going to take businesses, nonprofits, and all of us as stakeholders in the built environment. We all know the various levers we can pull. Or do we? If you don't, let's talk. At the community level, or this example, at the state level. Here's a state, the state of Alabama, that said, we're not going to wait for the federal government to come in and solve our risk problem. We know we have a problem. We know we have homes that are destroyed due to storms every year. And we know the most vulnerable part of these homes is the roof. We also know the science suggests that a stronger roof can actually protect the whole household. It can protect the house, the structure, and it can protect those inside of it. And so the state of Alabama did a pretty revolutionary thing about a decade ago and offered a $10,000 grant to homeowners to strengthen their roof to the IBHS fortified standard. So everyone here knows what the IBHS fortified standard is, but the Institute for Business and Home Safety has that standard. Those homes that were retrofitted, not only are they safer, but they saw their insurance premiums drop. So not only did they get a roof subsidized, they saw their insurance premiums go down, and they saw their resale values go up. And most importantly, after that disaster, their home stood. Neighbors might not have. We also know other things like if you have flood insurance, you can recover on average 82% faster than those without flood insurance. And we know that communities with strong building codes can save $11 for every $1 investment. So these are real world benefits, and these are benefits that we need to share more broadly. One, but two, these are examples, in this case, the state of Alabama, that did the right thing, not because anyone told them to do it, and not because the federal government paid them to do it. Let's be clear, that $10,000 grant did not come from the federal government. It was actually a tax on insurance licenses. And now other states have emulated this program. They're all funding in different ways, but one thing is in common here. These are states taking initiative to do these actions themselves, to fund these programs themselves, because they know there are benefits. Now, I promised we would talk more about the National Flood Insurance Program. I'll try not to bore you, but what I will say is that NFIP is necessary. And this comes from someone who worked in the commercial property and casualty industry, an industry that would benefit from more private flood insurance. And this is not just a personal opinion. I assure you that my colleagues in the P&C insurance industry feel the same way, which is, yes, there is opportunity for the P&C private flood insurance industry to play a bigger role. Yes, there is that opportunity. But the NFIP remains necessary. In fact, the two probably need to coexist for long into the future, because there will always be policies that the private market won't take on. And it just doesn't make sense for the private market, for each of those companies, to step into the morass of what has become the NFIP. The NFIP is over $20 billion a day, 20 with a B, with no hope of becoming fiscally solvent without major reforms. Unfortunately, to the second point, reform appetite is low, meaning Congress is not acting on the necessary reforms. Much like the FEMA reforms that would take Congress to act, FEMA cannot reform itself. NFIP can also not reform itself. It would take Congress. And the oversight committees, unfortunately, that oversee the NFIP in Congress have been very reluctant to act. There's a dozen or so proposals that have been before Congress for about the past decade, multiple administrations, and they've gone nowhere. I would argue that until those reforms happen, we are not going to see significant improvement in NFIP. Now, that said, maybe government efficiency isn't our priority. We don't care that we're paying $600 million a year in interest to to another arm of the federal government. In other words, FEMA is paying $600 million in interest off that $20 billion to the Treasury Department. That's $600 million a year that could otherwise be spent on risk reduction or other types of grants that FEMA offers, but instead, the federal government is paying interest to itself. And maybe, again, we don't care about that efficiency loss. I do. But maybe we don't care. The reality is, even in its current kind of rather broken way, NFIP still needs to exist because NFIP does pay claims. NFIP is required to offer you a policy when nobody else will. So for those reasons, we need NFIP to persist. Ideally, it would be reformed. And yes, the private markets are part of the solution, but they're not the silver bullet. One of the reforms we did to NFIP when I was at FEMA is called Risk Rating 2.0. We set up FEMA, we thought, for success, NFIP for success, in the sense that now, for the first time in NFIP's history, if you have an NFIP policy, you are paying the rate that is based on the risk for your particular property. Believe it or not, for the past 30 years in NFIP's history, it was not the case. It was whether you were in a flood zone or not. That is a false dichotomy. So if you hear all this about flood maps being outdated, in some cases they are, it actually doesn't make a difference when it comes to your particular premium. Those maps make a difference for other things like community flood planning, but not for your premiums. Right now, if you get an NFIP policy, you are paying based on the risk to your particular home. I mentioned this also because as we talk a little bit about BRIC reforms, like what could be the future of hazard mitigation and grant programs, here's a lesson in a reform that actually took hold. Here's a lesson in a massive, broken, you could say, government program, NFIP, that was made quite a bit better by one reform. So government reform can happen and it can have real tangible benefit, both to the taxpayer and the policyholder. And I think NFIP and that Risk Rating 2.0 is an example that actually could be emulated for BRIC. Now, this is my favorite report of NIBS, of course. It was one from 2023. It's one that has yet to be fully implemented. And that's not a knock on NIBS, it's a knock on all of us. Because as we talk through this, I mentioned at the beginning, I said, if you don't know what you can do to contribute to resilience, we'll talk about it. Well, that time is now. And the roadmap we're going to use is one that is produced by NIBS. This report identified co-beneficiaries, and together they're called the ecosystem of co-beneficiaries. Now you can imagine the co-beneficiaries, those organizations, those stakeholders that would benefit from investments in resilience would include some obvious ones, like the insurance industry. Right? The insurers are going to benefit with a resilience investment because the risk reduction leads to fewer claims. Really intuitive, right? But some of these may not be as intuitive. You know, a lender is actually in the same position as an insurer is, because if there's a loss, the loan becomes impaired, and then it could end up being a delinquency or even a default. So I would argue the lender should have just as much skin in the game as an insurer. Governments? I mean, not only do governments financially benefit from resilience because of all the numbers we talked about, that return on investment and resilience. Investment means less government dollars have to be spent after disaster. It also reduces the load, the resource constraint and the response need for all levels of government. Think about it. If you're in a home that is more resilient and a storm comes through and you're one of those homes that is still standing, you're probably not picking up the phone and calling 911. You're probably thanking someone for the new roof. You're in the state of Alabama that may have been paid for. You're thanking your spouse for saying, thank you for getting us to buy this upgraded roof, or this better door, these stronger windows. You're going to be expressing gratitude at the time that your neighbor is probably dialing 911 and asking for help. They're asking for help from the local first responders who need to come and save them and hopefully avert what may be serious injuries or even death. But that local government is benefiting because those communities and those homes that were more resilient, they don't need to tax those local resources, nor do they need state resources, nor do they need FEMA. I think we often underestimate how the governments, from local to state to federal, benefit directly in the immediate aftermath of that disaster, and certainly in the recovery phase when those governments aren't having to pay for that recovery. The future owner is going to benefit. The future owner is going to have a home that's more resilient, that's worth more, as we saw in one of the previous slides. The tenant who lives in a home, including a multifamily home, that is resilient, what are they able to do? Not only are they safe, but they're able to stay there in the immediate aftermath of that disaster and go to work and go about and do their normal daily activities. Go to that grocery store and spend money and keep the economy going because a decision was made by a landlord or by a realtor or investor to encourage them to live there. And that realtor, again, the realtor has, just like an insurance agent, has a real opportunity to educate someone on the benefits of resilience. A realtor can share, if a realtor is properly knowledgeable on the topic of resilience, they can say, listen, this home is more resilient. It's going to be worth more now and in the future, and you're going to be making the right decision. If you're paying this much for the home, you want to make sure it stands after a disaster. If you're paying this much for a home, you want to make sure it's safeguarding you and your family when a disaster strikes. Think about how compelling that is for a realtor. So if we identify these co-beneficiaries, which that report did, we should take it to the next step. It's beyond just identifying all of us and all of our industries as co-beneficiaries. We go to the next level and say, when co-beneficiaries share the cost, resilience becomes more economically sustainable. And what do we mean by that? It means transforming these co-beneficiaries into co-investors. And here's the answer to the question I posed earlier. What can you and your industry do? Here's many examples. The obvious, again, insurers can lower their rates. So you pay lower premium. Yeah. Well, insurers will say, we don't give discounts. Our premium is adjusted based on the risk. Fair enough. So don't call your insurance agent or broker and say, demand a discount. You should call and have a conversation with them about sharing this benefit that you might be thinking of investing. Like, so, for example, if you're like, I might replace my roof, I need to replace my roof, it's going to cost me a few $1,000s more if I want to make it more resilient. Instead of just spending the lower amount, getting with the basic necessity, talk to your insurance agent and see how they feel about this. Pose the question, not as a discount, but as them co-investing in this roof. And they may give you direct feedback. And if they say, hey, you know what, your insurer probably is just not going to change your premiums, then have them shop around. Have them talk to other insurers, either your agent or you personally, talk to other insurers and say, this is what I'm thinking you're doing. Will my premium be adjusted as a result? And here's the thing to keep in mind. See, there's a whole ecosystem. These investments should not fall on any one party, including the individual. The insurer is not going to be the sole beneficiary if there is a disaster that occurs. So they shouldn't be the sole investor. In other words, don't expect your premium to be reduced by the amount of the investment you made in that retrofit. Think of that as one piece of the puzzle. Because then these other co-beneficiaries, go back to the lender should be playing a role here. The lender should offer you a low or no interest loan, for example, a HELOC or otherwise. A lender should see, again, if we make this home more resilient, we will experience fewer losses, fewer defaults, fewer need for us to engage in the post-disaster aspect of recovery. So a lender should, and I emphasize should, be involved and be interested in incentivizing. Like, same with governments, I mean, the obvious, the grants we talked about, those are all strong incentives. real estate professionals and investors and developers and builders, they all have a role to play. Again, here's a number of examples here. What we have failed to do at this point as a society, however, is to mobilize all of these co-beneficiaries as co-investors. That onus is on us. That onus is on those of us that attend conferences like this, those of us that work in our industries every day, those of you that took time out of your day to talk about resilience. It's about talking to the people at your table from different industries and saying, hey, how can we mobilize support around this? It's about talking to your clients or your friends or your families about resilience and about how each of us has a role to play. The bottom line is, this is NIBS' conclusion, which I happen to agree with, the more co-beneficiaries participate, the lower the net cost of the property owner, and the greater the societal return. So, to summarize, I am cautiously optimistic about FEMA reform. I'm certainly more optimistic today than I was a month ago, 6 months ago, a year ago. 2, BRIC is back. But unless we want to risk it going away again, we need to make sure that we keep that as a priority within our industries, that FEMA continue to fund pre-disaster hazard mitigation. And to the extent that that programming needs to be refined and optimized, we should offer a solution. 3, NFIP needs to continue to exist. It sounds easy to just say the private market should play a larger role, and that's true. But the private market is not ready to take over all NFIP policies. NFIP needs to be reformed, otherwise we're paying this crazy amount, $600 million a year in interest for the long term. And 4, the building industry, all of you, have an opportunity, and I would say a responsibility, to lead. Thank you.
So we have some time for some questions. If you want to raise your hand, we can come over to you with a mic. Just share with us what your name is and what organization you're affiliated with. We'll start over here.
Hi there, I'm Ellen Thorpe with the Coalition for Sustainable Roofing, and I chair the NIBS Consultative Council. So I'm definitely part of industry, I'll own that. One of the common inaccurate sometimes complaints about industry is that regulations are needed to force industry to act. From an industry perspective, we don't like being forced to act, and we want to be part of the solution. So when we talk about us leading these changes for resilience and that the buildings industry needs to lead the change, how, in your experience, which is extensive, how do you suggest that we look at that balance between we need regulations to force industry to change and I don't want to be forced to do anything, I want to be part of the solution? Thank you.
Like, I can certainly empathize with that. And having been in the property and casualty industry for quite some time now, I can say the insurance industry feels the same way. The insurance industry is one of the most regulated industries in America. It's regulated at the state level. If you've seen one state's insurance program, you've seen one state. So at the same time, here's a heavily regulated industry, insurance, saying, if you want us to help make the nation more resilient, the way to do that is not through regulation. You already regulate us enough. And I think that it does play out that way, that to the extent that there are industries that are willing to step up and show and demonstrate to policymakers, and not just federal policymakers, again, insurance is state, going to state policymakers, and saying, here's what we are doing, and here are the ways that the residents of this state could face lower insurance premiums, then that's always going to be the best solution from the P&C insurance industry perspective. That said, due to various issues, and I would actually blame over-regulation, not under-regulation, as to some of the challenges that several states have seen with regard to insurance. where insurance is increasingly unaffordable or even unavailable, where you have insurers fleeing states. I think the states that think the solution to that problem is more regulation are dead wrong. I would argue that the reason that there may be an insurance crisis in some states, some disaster-prone states, is because of regulation. Because prices were kept artificially low, or because of certain political reasons, including, and political, you can use that a super negative way. I mean, if you are an elected official in a state and you are charged with regulating an industry, which is the case in a number of US states, a number of states have not appointed but elected insurance commissioners, then to say that you're not political is untruthful. And the politics are that you are representing the individuals that elected you. And if you feel your mandate is to keep them happy but through lower insurance premiums, that may feel right politically or in the short term, but it's a wrong decision long term. And that's what you're seeing play out in some states. So for the building industry, and you mentioned roofing, I think to the extent that the industry can demonstrate these benefits, like the fortified example I used, or other examples that you can use, and to the extent that you can demonstrate those benefits in your community and with your state legislators, all the way up to the federal government, that is a great way to convince policymakers to be both proactive and not come to the conclusion that there is a regulatory solution.
So we actually have two mics. My colleague Cheryl has the other mic. So anyone have any additional questions?
Pushes the problem further downstream. So we put in a seawall, and the beach that's south of that is now more vulnerable than before. So I mean, how would you balance that?
So our system of government is federalism, and in federalism, the federal government plays relatively small. And that's certainly the case for FEMA. FEMA is never in charge of disaster response. FEMA can't tell local communities how to mitigate their hazards. Can't tell them to do it or how. It can't tell local communities how to put in place, or which building codes to put in place, or zoning laws. And so as much as I'd like for FEMA, for example, the federal government to play a larger role in helping communities, they're relatively limited. It really just comes down to incentivizing. Because the federal government has grants at their disposal, and that's the strongest incentive that they have to do that behavior. Now, there are certainly communities that are better, more economically well off than others. And I would say, listen, if every community that was economically strong, with a vibrant local economy, plenty of tax receipts, if they were all investing in resilience and they were the have-nots, this would become a big issue. Now, unfortunately, that's not something that that plays out that way, right? Because while those communities that have the ability to pay for resilience investments could do that, many of them are not even prioritizing it, right? So even in the best case scenario, where you have federal grants that incentivize this behavior, and some communities that have strong revenue and can't afford it, even they aren't doing enough. So then you look at the communities that are socially and economically vulnerable, and that even worse might be also vulnerable to disasters, right? Because they happen to be an economically depressed area that is also happens to be in Tornado Alley or in the Southeast vulnerable to hurricanes. That is the biggest challenge. that I think we as a nation face, which is how do those communities stand up and do the right thing if they can't even think about their must have items, the schools and healthcare, right? And for that, I think the only way to look is long-term. It's hoping that community, through a number of wonderful nonprofits that are helping the most vulnerable, most economically and socially vulnerable communities, help them actually apply for some of these federal grants. Because some of those communities, this is the most damning thing, those communities don't even have the resources to apply for it. So if, through a number of support mechanisms, nonprofits being one, I could name a number of nonprofits that are now sending experts in grant writing, FEMA grants to those communities, that's a step in the right direction. But for all of us, and for all of the communities that we live in, I go back to what I said initially. We can't look at these as one-off things. We can't look at resilience as, oh, that's not in my term, right? As an elected official. Like, I'm not likely, I'm gonna roll the dice as an elected official, as a local mayor, and say, it's not likely we'll have a disaster during my term, so we'll kick it down the road. We need those local officials to be rewarded for making those investments, for those local officials to prioritize long-term infrastructure investments in the same way that they would be expected to prioritize schools and hospitals and other public facilities. And all I can say is that deserves our attention, their attention, and all of you to help mobilize that support and at a minimum educate policymakers on the value of resilience.
Thank you so much, Dan.
I think we're out of time for questions, but thank you so much. Let's give Dan a round of applause.
I want to say thank you to Dr. Kaniewski. Really amazing experience and expertise, which I think reflect what we've all seen the last day. We have, as I started out, saying this incredible opportunity to meet the moment. And I hope that what you've taken away is this energizing, contextually rich way that we can, as a community, move forward to meet that moment that is in front of us. And I hope that next year at Building Innovation 27, you will be able to join us again so that we can go back and say, what have we done? Where have we progressed? Because this is a moment for the built environment that has finally coalesced over the last 50 years. And I'm so excited to share this moment with all of you, and I hope to see you again. Do not forget to claim your CEU credits. You earned them. And please let us know how we can make this a better event for you, what conversations you would like to have, the experts that you would like to see on this stage, and what we can do to make sure that we are continuing to meet our mission and to facilitate and do everything we can to promote and protect the public interest and to promote better outcomes for lives, livelihoods, and communities across the nation. Thank you so much for coming.